Good evening, TheoTrade. This is Corey Rosenblum bringing you your Theo Night video for August 14, 2018. It's the middle of the month. We're in the middle of a little trading range channel, and we'll take a moment to update both the daily chart levels, spots, markers, expectation, game plans, and then at the end, we'll drill down to our volume profile. We'll take a look at specifically levels to look for, open air pockets, consolidation zones, and how that plays into our trades for the rest of the week, short term and on the swing basis. We'll start with the S&P futures. This is a year-to-date chart with that crazy January rally and that February sell-off. From that point, the S&P has remained in a rising trend line channel from April to present. So we're going to focus the attention on these swings, low to high, all of which are contained within rising parallel trend line channels. And that's where we're coming down from. The weekly video last week, we talked about the odds favoring, very strongly, a sell swing down away from 2860, and the first target was our 20-day moving average, or this little midpoint, at about 2820. And that has been achieved, and right now, we are bouncing up off of that target. It's similar to what we saw earlier in August, with a similar sell swing away from the pivot, down toward 2800, and then up away from it. So we'll be defining our trades, swing and otherwise, within the context of, will 2825 hold, as it has done currently, and thus get a bounce the next couple of sessions up toward the 2875 level? That's our 2018 high. Or is this a one-off day that's going to be a little short-term bounce, sort of like these back in June, before the market sells off to the lower pivot or trend line? That's going to be about 2775 beneath 2800. And everything we'll do from this point on the video will address whether we're going to hold, bounce, trade to the high, and or fall to the low. And that's going to frame out our short-term trades. On the Dow mini futures, notice relative weakness. What's that? That just means that the Dow is not at the prior high from 2018. It's roughly in the midpoint of its crazy January rally and then large February sell-off. And it has maintained more of a sideways trading range in the Dow futures. It also is at the high, and it also is pulling back away from the high, but it also is playing off of moving averages, just like the start of August here. So again, the game plan at the midpoint, it's a little more difficult to predict and forecast. We're just playing the departure, playing the immediate movement, 3, 4, 5 sessions into the future, up away from, that's going to be again the August 4-day rally. Might that happen mid-August, or the prior little bounce but then breakdown? That comes to us from June into July here. So that's the scenario we're planning. On the Nasdaq, we have specific areas. We'll see these as open air pockets. A little edge of the cliff action takes place beneath 7,400. And that's our spot to focus on the Nasdaq futures. Might it rally? Today is a rally session, Tuesday, and that's taking us potentially back to the 7,500 level, which is well above the January crazy and the February sell-off. Notice we're framing the session and the plan with respect to where the market was in January, what happened in February, and then what has occurred since then. The Nasdaq has remained stronger, and that's in part because of Google and Amazon and little titans of tech like that. Apple as well. Facebook, not so much. Nevertheless, Nasdaq is at the midpoint or middle of its rising wedge pattern. So not a whole lot to predict off of this. All we can do is look at the levels, put trades on, and then get ready to react, especially if these support levels fail. And that does open an open air pocket play to the downside. While the Russell Index, Russell Futures, is above, remember the January craziness wasn't that crazy in the Russell, but the sell-off just as bad in February. However, the Russell did break and trend powerfully higher, very, very strong, in May and June. From that point, we have had a sideways consolidation, possibly even a trend line triangle that's going to be about this 1700 pivot spot. That is where the Russell is currently. So the main idea, as we sum the daily charts into an actionable plan, at the midpoints, trading ranges, decision points, and we know that consolidation periods, June to August, tend to give way to future breakout periods because range expansion, May to June, led to range contraction, and we are getting ready, not this week potentially, but beyond in the bigger picture, for a range breakout. The odds may favor a downside play, but we watch price and anything that happens above 1710. That's the daily perspective. Dropping to our volume profile. Now this is just for intraday trades and very short-term pivot points, levels, and spots. What's most important about these charts? The point of control, which is our red spot. Think of that as a magnet. High volume nodes, which is this blue, spots where lots of price and volume took place. Volume at price levels. Two nodes going to be here, consolidation chop and consolidation chop, but in between that is probably our most famous or interesting component of the volume profile. It's a pocket, and the pocket exists right above here. That's 2842, 2843, and if the market can inch its way into the pocket, that's going to push the index S&P probably through the pocket rapidly from 2840 toward 2860. And that is the extreme of the value area and the point of control. But until and unless that happens, we do have what we call range dynamics. Low to high, high to low, low to high, high to low. And that's how we plan out the game for the next series of trading sessions. Friday, Monday, Tuesday have all been within this 2825 and roughly 2845. We do have a bullish pocket above, a pocket beneath, but a high volume node which indicates chop and consolidation. And that's been successful the last 3 sessions. The Dow is actually at the point of control. And we like seeing this distribution. High volume node, chop, low to high, high to low, back low to high, and we have this point of control at about 25,300. Open air pocket does exist, like the S&P, all the way to 25,500. And that's our Dow futures. Going to the Nasdaq, I think this is probably more interesting for us and gives us a little bit better chance, odds, edge, and trades if the Nasdaq begins to break under 7,400. See that spot? I drew really 2 support zones, 2 edge of the cliff, edge of the pocket, pocket being relatively clear beneath 73, 75. If that happens, the Nasdaq probably falls rapidly towards 72.50, and that does trade into our higher time frame pivot. Remember, large time frames set the structure. Short term is how we trade, and often we trade in terms of departures, movement away from, in this case maybe away from 7,400 towards 72.75, or toward. So toward or away from. Finally, the Russell remains in a sideways consolidation, a little bit longer than the S&P, Dow, and Nasdaq, because it's low to high, high to low, low to high, high to low, low to high, and then maybe from this point, this is forecasting, high to low. Not really having a open air pocket because a lot of the price action has taken place in between 1675 and 1695, or to be easier, 1700. So we're looking for short-term plays within the broader context of this rising parallel trendline channel, maybe with more open air or space to the downside, but we can't discount that repeat pattern of the next few sessions being bullish, as much as we would not like that, all the way to 28.75. So we're objective. We're taking the price action, and then forming trades on a short-term basis in terms of departures away from this toward, or if we break away from 28.24 back to 2800, and then maybe 27.50. This is Corey Rosenblum with your evening update for TheoTrade Night video for August 14, 2018.